Hey, welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, May 3rd, and we got a few economic news releases scheduled for today. The biggies, of course, will be tomorrow with the jobs numbers. So we'll start off, speaking of jobs, the weekly jobless claims. Last week we had about 392,000 people applying for unemployment. This week we figured it would tamer down a little bit down to about 378 and actually cooled off down all the way down to 365. So we had some good news right there. Came in better than expectations. Uh, Productivity for the first quarter came in. Fourth quarter last fourth quarter it was revised upwards, so that's good news. So fourth quarter is actually higher than what we anticipated or what we thought. And it was from 0.9 to 1.2%. We figured it would be a little bit negative at 1.5% or 1%, and actually only came in at negative 0.5%. So better than expectations. So first quarter was a little bit cooler than obviously the fourth quarter. And unit labor costs also first quarter. We had 2.7% back in costs up in fourth quarter. We figured it'd go upwards and actually cooled off a little bit down to 2%. So a little bit better on the unit labor costs. And then last but not least, we had the ISM non-manufacturing for April. So what this is basically indexes for the services industry. So this will give you a gauge as to what the service industry is saying. And we had back in March 56%. We figured it would calm down a little bit down to about 55.4, and actually went a lot worse. So we had a lot more of a sharper turn on in the service industry. And of course, you'll see that it's going to have adverse effect on the stock market. So as a result of that, the stock market's down. Coupled along with more concerns about Europe, the European Central Bank had their meeting and basically left rates remaining, even though they are starting to face some inflation problems over there. But the concern is that this debt crisis still isn't going away, and especially if a few of these countries are officially now in recessionary periods. That maybe it could exacerbate the problem even further, since they need growth to be able to pay out these debts, and right now they just don't see it coming along. So this could create obviously more prolonged issues for that region. So let's go ahead and take a look, see what the bond market's doing today and where interest rates are moving. We're kind of moving in a sideways pattern. We're start off the day hitting the floor, and now we're kind of touching the ceiling. So as you can see, we've been kind of somewhat of within the trading pattern of the floor and ceiling for most of this week. And again, tomorrow will probably be the big day. It could break upwards or downwards depending on what the job numbers comes in. If it's a good jobs number, we could obviously see a rise in interest rates because of that money going to the stock market. If it comes in a bad number, the bond market could improve, where money's coming out of the stock market going into the bonds for flight to safety. So we could see some real volatility tomorrow regards to the job numbers. So anyways, rates are about the same as where we left off yesterday. And you guys have a wonderful day, and we'll stay tuned until tomorrow, see what the job numbers bring to us. Have a great day. Stop by Mike's Daily Market Report. Get your free daily updates emailed to you by subscribing. See you tomorrow.